But this one, somebody wakes up even before taking coffee, and this is, like 2 p.m. 2 p.m. Kenyan time is like 7 a.m.
Yeah.
This is Trump already woken up, he's ready for the day. And what does he do? 40% tariffs on Chinese steel. Dow Jones down, gold up. Hey guys, welcome to another episode of Bullish Banter. As usual, I'm your host, Jesse, and today I'm joined by a special guest. I think it's only fair that he joins us in this episode. Rufus, how are you?
I'm good.
Yeah, I'm so excited for the day, so you'll allow me to.
I know why you're excited. We have a new all-time high in gold.
True. And I think I was wrong on that call.
Yeah.
But I'm still convinced that we need like a 2 to 4% correction.
Yeah.
Before the rally continues. Long-term bullish,
yeah.
But in the medium term, we should have a small correction. That's my view.
Is that before or after the election?
Now, that's the big question.
Yeah.
I don't know. Because as you have seen so far this year, every time we have hit an all-time high, there has been a month where we have had rather 5%, sometimes even 6% correction before another very strong rally. But this time from around July, we have had a straightforward rally.
Yeah.
So at some point it will reach where I don't want to use overbought, but rather there will be no person anymore to buy or to sell it from. Yeah. Maybe our guest will explain to us more. Of course, I'll allow you to introduce yourself briefly.
Okay, I am Dominic Merege. I'm an investor relations specialist. I've dealt with the Europe markets, the Middle East markets, and currently my current operations in the South Asia markets and the US market. So, yeah.
Yeah, you mentioned categorically you are not a trader. So
Yeah.
for this particular episode, I want to believe our listener will benefit a lot from that investing side of you. And before we go back to gold, last week, Central Bank of Kenya cut the interest rate to 12%, a big 75% cut. Maybe what do you make of it?
Shall we start?
Yeah.
Okay, so It makes sense why they will cut the rates at the moment. According to their own data, the inflation rate is low. And I believe that they noticed a worrying trend that private sector credit is not being taken up. And without private sector running things, then there's slow economic growth. And given that government is highly reliant on the private sector, they need them to grow for them to grow also their revenues. But the issue that I believe may be a challenge is the SMEs, because in this country we are running the informal sector runs the economy.
Yeah.
So if the treasury has itchy fingers, it will affect the formal sector, but the informal sector is insulated. But with the SMEs still not getting the credit that they will need to run the operations, then we may not see that much of attraction. And also, if you keep in mind, the biggest worry was the velocity of money and the confidence, of which that is affected mostly by Treasury and CBK. So if, let's say, in the economy, the businesses don't have confidence in the anticipation of the future, then they are not willing to put their long-term decisions at the moment. So we may not see much traction even as they cut the rates further, probably to 11.5. I don't still see that kind of attraction in our market.
Interesting that you mentioned the next cut, another 50%. I guess, we have seen recently in the media that the executive still wants more.
% or basis points?
50 basis points. 50 basis points. 5% cut.
Yeah.
I know, rather from the recent commentaries in the bill, the executive would want even a lower number,
single digit.
Yes. Now, to add into that or consider into that, there's already the finance bill, which was not successful. There is another statistics I saw recently, I think it was Business Daily today, as we record, this is of 17th of October, whereby banks, commercial banks, contribute a big percentage on the tax revenue of
Yes.
government.
Yes.
Wouldn't a further cut definitely have an impact on revenue carry will make, I believe? Or isn't that maybe something to consider with all these activities that we're having? Maybe.
The issue with our economy is Treasury doesn't have policy cast into stone.
Okay.
That will create confidence in the banking sector. And the banking sector has their own confidence model when lending to people. You understand that they have their own backs to look after. So your credit history matters. So if, let's say, during the 2020 dragging all the way to date, and your credit history has been back and forth with delayed payments, that still will affect how they offer credit to you. When it comes also to the report by the banking industry, we always say government doesn't have any mirrors in its hallways, because if you heard what Mr. Gashara said, for every 100 shillings they make, 57% is taken up by the government, 28 is taken up by the operations, and then 15 to their shareholders. Now, if let's say government were to hit their play and avoid these erratic decisions of trying to target the banking industry for more, then maybe it will make more sense. If let's say the CBK, on the other hand, were to scale back on their recent policy on trying to consolidate banks, instead of consolidating banks, we go towards a decentralized banking, where more micro lending institutions are within the economy. Then we'll see these lending institutions focusing on the SMEs, and then we'll see actual growth. But at the moment, we have a similar situation as the UK, where you find in the UK it's big banks focusing on their businesses, and the big banks focus on big businesses, so leaving out the small businesses. And that's why you find the UK has had an issue where the US investors come and take up the startups and the businesses of the UK, and then they basically run it. You have US businesses within the UK, but they aren't really spurring the kind of growth that you like, where businesses start from small growth all the way to mature growth, and that's has been the issue. And they don't see any changes in Kenya in the medium term, and also in the long term. Probably in the long term, but in the medium term, given that 2027 to 2031, they have back-to-back interest payments and principal repayments, I really don't see that changing much. We'll be back to high interest environment by 2027. That's my opinion on it.
Interesting that you mentioned decentralization. I know we'll cover that later. And I know your two views are very different on that. Maybe Rufus, your comment on what is happening, especially on the interest rate cut, but obviously on the how, if we are doing this maybe to cover, to spur credit uptake. And we discussed earlier how the bonds are doing. How do you think that will affect, of course, the future bonds that they issue, and obviously government financing in Kenya?
Well, of course, one thing is true. There's no single nation that has ever developed with high interest rates. So you need to enable the private sector to be able to build capital. You need to have startups, entrepreneurs, building businesses, creating employment. That's how you literally grow an economy. So any policy that pushes interest rates higher is most often bad for the economy. So now that we are seeing interest rate cuts coming back, do you remember during COVID when major central banks cut interest rates, including the US, ECB, and so on? We had a lot of angel investors, VCs. We had a lot of conferences around, and a lot of businesses in Kenya got out of financing, though most of them didn't make it, but there was a lot of investment happening around. But now, for the last 2 years, it has been more of a drought. entrepreneurs haven't been getting investments. So cutting interest rates is very much welcome for this economy.
Yeah.
Also, on a point you mentioned about the taxes, government heavily relying on banks to collect revenue. I don't think governments ever lose revenue. They always find it in one way or another. Like if banks don't pay much, let's say in terms of taxes, that money will end up somewhere and the government will find a way of taxing it from another source. So it's more or less like if you look at business or let's say the important parts that create employment in an economy, there are those different levels that you can classify assets or resources, things like, let's say, fertilizer, things like land, things like commercial vehicles. They are literally very important for production.
Interesting. Globally, they are cutting interest rates, and I think this is basically a signal that the world growth index is basically on a decline, or it's decelerating, to say the least. My question would be, given that what is happening globally, the geopolitics, U.S. election coming in play, Chinese really trying to boost the economy with a lot of stimulus packages put there. Will this, they normally say what, when the US or the big G7 basically sneeze, the world catches a cough or a cold. Rather, are we likely to benefit from lower interest rate environment in the developed world, and ourselves aligning with them in that we are able to also get cash being allocated on our side? Are we likely to benefit from that trickle down effect?
Yes, Kenyan?
Yeah, basically.
Well, I see our startup ecosystem benefiting a lot from it, specifically because we really put ourselves there. Even though we haven't managed to get a unicorn, but the term Silicon Savannah has really stuck with Kenya, and we have marketed it such. And when it comes to capital raising, I think, is it last year or this year? I think it's last year, we managed 836 million.
Yeah.
And of which that was one of the biggest. Yeah. So with a lower interest rate there, I believe that the venture capitalists that raise money from the US or from Europe and invest in our startups, I think we'll see more growth into that. But meanwhile, our startups should up their game in the sense that they should realize there is little tolerance in the African continent when it comes to that capital coming here. The capital that lands here is not patient and is not as risk tolerant as they would like to imagine. Because you find most of our startups, yes, they started off well during the 2020 season, but they assumed that they will run the same way as Silicon Valley, of which once the investors, they can't see their returns, they start to pull back their funding, or they just withdraw from that entire venture. And that's why you find some of our startups, they kept on failing, their assets being reclaimed by debt, by a private equity that gave them debt. So that's an issue. But I see growth on the startup ecosystem following that.
Interesting. Your input on that?
Well, I think we'll have a lot of money flowing in. Back in 2020, this is when guys were buying a picture of a rock for $1 million. Like, we are going back to that age of easy money. And once there's excess capital, it basically inflates a lot of other asset classes.
So if you look at let's say for the SEZ ecosystem here,
yeah,
there has been a recent change with the existence of Tariffs SEZ.
Yeah.
So it focuses specifically on service.
What is SEZ?
Special economic zones.
Yeah.
So Tariffs is Two Rivers International Finance and Innovation Center. So they focus specifically on service sectors. And the good thing, it's plug and play. So if let's say there are startups they would like to land here, it will be easier for them. And when it comes also to the specification of the sector, it makes it easier also for those startups to land there. And with I think the new policy on digital nomadism, I think it will be an addition to that particular SEZ. So we probably might see more startups that would like to use Kenya as their probably their secondary location. They'll probably land in the SEZ considering the tax incentives. Also, when it mentioned the tax policy, I think it's important for the government to gain some of the lessons it has from its own policy, because there's no way on the other end, on one end, you have the SEZ and the EPZ to attract investments, and then on the other end, you're mentioning that Kenyans have been conditioned that high taxes are going to cripple them. Yeah, because effectively, what you're admitting with the SEZ and the EPZ is our tax environment is so toxic that we have to lower it down to offer a corporate tax of 10% for these investors actually to land here and stay here for 10 years. If that's the case, then what's good for the...
It's good for Uganda.
Yes. So even for the local industry, but the only reason that some local industries here, they can move to the SEZ because they already develop an ecosystem within that area. They are close to their customers, so they don't really have to move it. And that's why you find some of the our businesses, they actually go under. Treasury, I think this year had mentioned that the Finnish Development Agency was conducting a study on studying the Kenyan underground economy. You don't need a study to understand that this is a market response to protect businesses that would like to survive. That's why they go under the radar. So you just have to replicate the good policies with the good policies that you've had with the SEZ and replicate some of it in the
entire economy.
Yes, make it a flat base like the Mauritius. Mauritius, the corporate tax is 15%. It doesn't matter where you land. There's no special zone. Land in the country, start business, and that's why
Dubai is what, 5%? And the guys are doing well.
Interesting. At some point, I was wondering, the sentiment right out there is quite negative. And for a moment, I thought today, Kenyans will find some positive vibes on Kenya. No sooner had I turn me back in. To wrap up on Kenya, and also, of course, now go fully global, JP Morgan has been given approval to set up shop as a introductory office, something like that. We were speaking earlier like that Citibank has been in Kenya for a while, and I think JP Morgan, it's not a small bank compared to Citi. It's a behemoth, basically. What's your take? Personally, my take is good thing. It democratizes it. The way Starlink came into Kenya, and then all of a sudden we are getting a bump in quality of service on Safaricom internet. I think JP Morgan coming in, even if they don't open a retail shop, just by them being here, it raises competition. We are usually competing maybe with our neighbors, and to some degree with our financial sector, given how Equity Bank is invested in Tanzania, DRC, Ethiopia and all, they have been doing well. But perhaps maybe with the JP Morgan, it might make them be competitive a bit. What do you make of that?
The play I foresee, they will take a similar role as Citibank. Earlier this time during our peak of the debt distress, Citibank and Standard Chartered, or they played a role in refinancing our debt. So I see themselves playing a bigger role when it comes to 2027 all the way to 2031, where the problem that we saw in 2024 is now spread out within a certain period. So probably JP Morgan may offer some of its services to kind of relieve the government of that burden. On the other hand, it also gives our high net worth investors a chance to invest in the US market. And it's interesting to see who they will partner with here. I visualize some Kenyan companies taking the role to present themselves to JP Morgan, and also with a Kenyan representative.
Yeah.
Probably he may take some preference to deal with former entities he has worked with.
Yeah.
So that's something that we like to track.
Not to mention names, but if you
Yeah,
about and connect 1 and 2,
So if he liked where he worked,
Yeah.
and he's now the representative, well, he'll more likely to make a deal with one of those entities.
Yeah.
We don't want to mention that, but
True.
I'm interested to see who they'll partner with,
Yeah.
and also their take on how they will approach our high net worth investors getting into the US market. And also probably, given that the CEO of NSC is from the private side, probably may try to see how he can work with JP Morgan to see how we can upgrade our NSC. So it's ready to see how they make their play here.
Yeah, you mentioned NSC and something came into mind. I think when he took over, the CEO is Frank Mwite, I believe. Yes. I think he went to NASDAQ to talk on some, those bilateral agreements. And I think last year or the year before they introduced day trading.
Yeah.
And of course, almost 5 years ago, they introduced derivatives market. And I think, was it earlier this year, they had reached a milestone 200 million or billion in terms of transactions. So when you say that they might partner to bolster the NSE, I personally was thinking about capital flight, but that might bring an interesting perspective because you being a value investor, and there are some companies genuinely in Kenya which are well run, they can generally give you good revenue, just that they have bad sentiment in the markets.
Probably they have a different view from our own CEO, but I don't know if let's say cross-listing is a thing, considering that a few weeks ago, there was a UK company that signed an agreement with the NSC to see if, let's say, they can list UK firms here. So given that our companies, as they stand, when they go to the US, they're penny stocks.
Yes.
So if, let's say, their penny stocks will probably want to cross-list, I will be interested to see how that goes about, or if they will envision that. But it's highly unlikely, considering the US market is highly liquid, and there are a lot of value investors there. Here, you find most of our companies are undervalued. And you find the retail investors don't really have a play in it.
Yeah.
We mostly rely on foreign investors. So it's something that, let's wait and see, impress me. Yeah. Any decision that comes out of that, I'll be impressed.
For me, the way I think is by JP Morgan being around here, that might bring instant access to like the entire US market. So like Kenyan investors, whether retail or corporate, they'll be able to access whether it's the New York Stock Exchange, whether it's futures, options. All those options will be available for Kenyans. But also, it's a vote of confidence for other firms in the US. So if they know and trust JP Morgan as their bank, and they have opened a branch in Kenya, then it might be easier for them to do business in Kenya, knowing that they have their own bank here. So I think it's a big step, and maybe it's just the beginning of an entry to the wider East Africa.
Well, to be fair, given we are now global anyway, if you go a Yakwe from where we are, Microsoft is just here.
Yes.
Google, I think, is on Gong Road or something like that. There are already some global Silicon Savannah companies which have literally set up shop either as their headquarters in Africa or sub-Saharan Africa in Kenya. So I think JP Morgan is just saying, okay, so money is going here. We might not have to call them and have all this T+3 settlement debt and just have it, what do you need? Okay, let me call somebody when they wake up. And at least to some degree, our time in Europe is the same, because right now New York Stock Exchange is open and transaction can happen. I want to speak as plainly and not as factual as possible, but I think there is already that, how do I put it, those who came first to survey the land, and then they have seen and they have built some good network around here, and living conditions might have favored them. And then they said, okay, now that our operations are working, we might need a bank. And they brought in their bank.
Yeah.
That is what I'm seeing.
Yeah, 4 years ago, I remember the Green Company complaining that they lost almost all their developers to companies in the US.
Yes.
Yeah. So I think the number one thing that is really interesting in Kenya is the level of skill and education that Kenyans have.
Yeah.
There's a lot of talented guys here. So they want to take that talent. But also the other things like when you look at climate change and these policies, Kenya has the benefit of having a majority green energy. So they take a lot of carbon credits from that.
So staying with the global moments, what is happening in the Middle East? I know as we lead up to the US election, it will still play a big part. And, I assumed originally, or rather it was already a fact there that Middle East was the great, geopolitical tensions, given that from the investing point of view, Russia, Ukraine had already been priced in whatever manner, and all the risks to some degree mitigated. Middle East, we were starting to sort of get used to what maximum implication can it have been on commodities prices, or even just in even gold prices, for example. And then on Monday, the Korean issue again emerged. Are we likely to see these geopolitical issues, lead to something big? I want to say a market crash or something. Or are we likely to see it maybe simmer down, and then people sort of, investors per se, price it in somewhere and then see which aspect will be affected? How can we get an alternative to it?
Well, when it comes to the commodities, I don't really think the Middle East affected it as much, considering that the central bank did something a little bit odd, that they preempt their continuous uptake of gold reserves. So that one would affect the gold prices. The central banks are the biggest holders. As for oil, let's see how it goes. But I'm really banking on the US elections. If it goes the Trump way, then we may see a simmer down, considering he's a businessman. War is not really good for business. And if he has friends in the Middle East, he would like to see that situation sorted out. As for Israel, I will say, this may be on the conspiracy side, but you find on the politics side, when they are pushing for prolonged war in Europe, that affects the capital flows, of which capital finds somewhere safe to land. And historically, if you look at the world wars and the conflicts within Europe, once that happened, capital moved from Europe all the way to the US. And when it's in the US, it actually helps them.
When I see a lot of investors per se say Trump will bring stability, I think I alluded to this earlier. People say Democrats are more or less, given with the tax policy and all, they tend to cause the investment in the market generally. People become conservatives, people start going to emerging markets and all. But when the Republicans come in, lower taxation, the stocks basically perform well. And I think in the upcoming webinar, Rufus, you can share the charts and all.
Yeah.
Like you said, he will come in. Last time, I think the first or one of the top 10 executive orders was to get US out of NATO. You remember?
Yeah. And they fell in line.
Exactly. No, they fall in line, which is good. But you remember it caused some instability along it. Like during that time, it was chaos after chaos. Man, you'd just be chilling on a very nice setup on gold.
Yeah.
You are not a trader, but for us, that's very important.
It was good.
No, it was good and bad. In equal measure. And in equal measure, I mean 50-50, right on the middle.
Yeah.
So I'm like, okay, volatility is good, I like it and all, but be predictable. We know FOMC is on the 6th of November. It's already cast in stone, like you said. We know what will happen there. So you can mitigate the risk. But this one, somebody wakes up even before taking coffee And this is, like 2 p.m. 2 p.m. Kenyan time is like 7 a.m.
Yeah.
This is Trump already woken up, he's ready for the day. And what does it do? 40% tariffs on Chinese steel. Dow Jones down, gold up.
But
So I'm stuck with a question.
Yeah.
What do you mean by stability?
Yeah.
And what is it among those policies that you think will be good or bad for the economy from the Trump side, of course?
Well, from the Trump side, we already know his position on energy. So it's energy dependent.
Yeah.
Okay. So what I see going down is on the green energy. These subsidies on solar and wind, that isn't a favorite. But what will be interesting is I see uranium stocks going up.
Yeah.
Uranium, nuclear companies
Yeah.
getting more subsidies, considering he had mentioned micro reactors and the likes of Westinghouse, not new scale, ultra safe nuclear corporation. They have been a crop of nuclear companies that have been pushing for micro reactors. So small reactors, they can service small communities, military bases. So that one, he'll be big on that.
Yeah.
And considering also he's a person who is anything goes as long as it sustains our factories. So coal goes full on throttle. Oil, if let's say there are some stalled licenses in Alaska, I see them being sped up.
Yeah.
And him using his political muscle to get that through.
Yeah.
Once it's in place, historically, once a particular energy installment is in place, they don't really go back on it. They just flow on it, but they won't add any other.
Yeah.
So energy independence is what I see as a positive for the US, and that will also play well with their manufacturing. So some of them will go back, considering the prices of those energy of energy will be a little bit lower. As for the tax cuts, considering that the US is the biggest consumer market, and the Europe and Asia produce, and also Africa produce, mainly focusing on the US market, I think that will be good. If they get cheaper imports on their end, that means that the standard of living of their own countries, the standards of living of their economy improves, and also that extra income and that high liquidity goes into their stock market. So that's what I see from the Trump's presidency.
Well, for me, I think the market is already responding well to the potential of Trump becoming president. The Nasdaq is up, S&P 500, Dow Jones, they are all hitting all-time highs.
Good that you're saying
Yeah.
that Biden administration has been good for the market. Literally, this year we have had, how many all-time highs we have had?
I would say it was driven mostly by his I think is it the New Deal or something of the sort? There was a policy that provided subsidies for all these companies.
Yes.
So that's probably due.
I'm just countering his point of the economy is good because of Trump.
Well, I'm saying it's already like in recent months, like in the last 2 months, we have seen what S&P 500 down, Nasdaq doing double-digit rallies. I think investors are really expecting this. Trump is much more dependable in that if he says something, he actually implements it, despite facing political opposition or whatever. Remember this day, I remember Biden had visited Saudi Arabia to negotiate with them so that they can produce more oil, so that global oil prices can go down. So the following day, after he left, they basically implemented more oil output cuts. And I don't think that would ever happen with Trump. For Trump, if he says we are driving, in fact, when Trump was president, is this one day he tweeted, like, you Saudi Arabia guys, we need to lower oil prices. And they implemented. Like, for him, he's able to deal with things.
His word is bond.
Yeah,
Let's just put it that.
yeah, his word is his bond.
He's bond.
So if he says...
Really, guys. The guy with almost 100 cases in court, indictment.
Forget the cases. So
So if we are going to hold somebody by his words,
yeah,
let us look at his actions.
Yeah.
When on
Is it sure?
on business, his word is bond. You can at least estimate
Yeah.
if we had an agreement to sign. When he goes back,
Yeah.
I don't have to worry about him going back on it, unless, let's say, I don't fulfill on my end. But with the Biden, miracles happen.
Well, think about it this way. When Trump was president, that was 4 years ago, he implemented the China-US trade war. Of course, it wasn't a trade war. It's basically negotiation. He created a $600 billion market for US companies in China. And that's how we have Apple with big industries in China, Tesla, Nvidia. All these companies were finding a ready market. And that was part of the whole Make America Great Again. And if he comes back and continues with that war with China and other economies, do only make US companies stronger. And for an investor or a trader like myself, I think that's pretty interesting.
For a trader, volatility will be there.
Yeah.
At least I know VIX roll will be doing what, 20 to 40 in the market, that range, or even 30 to 50. That's extreme, but not good as well. Now, let me defend the Democrats. Since you all and a lot of traders have decided the excitement and the theater that Trump brings to the markets and campaigns, personally, I think that is what people are riding on. And they use the policy to mask the excitement that he brings to politics. Number one, you remember when he was president, he basically used an executive order to write off the Obama North American trade deal, the free trade area deal. And what did that do? It basically eliminated, ideally they would trade, and I think, of course, there are better placed people who can look at the numbers. To some degree during that time, it would make something like labor to be of value. From if you're in Mexico, you do not need to go past Mexico to the US, or if you are moving from the global south, right? Or you do not need to go from Canada when you are coming, or Haiti or the nearby islands. So I think by him basically tearing apart those free trade agreements that Obama had negotiated, he basically put US being the cheese. Everyone else is running towards the cheese. And therefore, immigration became the problem that it is right now. By putting all this centralized into one place, instead of distributing that problem to other people. So they bore the burden. You do not hear Canada complaining about immigration as much as the southern states. The southern states, right? Number one. Number two, during the Biden administration, the US was literally after Biden did that trip to Saudi Arabia.
Yeah.
How many times have the OPEC members conflicted among themselves that other members of the OPEC are not obeying or complying with the cut restrictions? Multiple times, right?
Yeah.
And what has the US done quietly? Became the largest producer of oil in the world through their shale oil fields out there. So technically, he has increased energy production by a big mile.
After he signed the Paris Climate Agreement on the first day in office.
Exactly.
Yeah.
And we can all agree, I think even BMW just admitted yesterday, that would be 16th of October, that they don't see electric vehicle being viable as of 2030 or 2050.
I think it's highly agreed across all manufacturers of motor vehicles.
Yes. Yeah. Now, another thing, if you noticed what Biden administration did when they came in, they did not tear apart that tax cut agreement that is expiring next year.
They wanted it to expire as soon as possible.
Yes, but they knew. But after looking at the number, I think it was the National Security Advisor, I've forgotten the name, who said once they looked at the numbers and how it was assisting them and their local companies, especially post-COVID, it was actually making sense, right? That is number three. So I think that is good. Now, one interesting thing about the, which you actually pointed to earlier, whereby you talked about decentralization. In the Harris campaign, she's proposing basically any household which is earning less than $400,000 annually to not have a cut, to not have a tax hike. So to some degree, if you're able to protect the middle income and you allow them to have access to credit at a sustainable low rate, you allow them to therefore be entrepreneurial at will, and you are also widening the base in which you as a government, if you wish to tax, or you are taxing, but you do not necessarily put the burden on a small segment. Like, let's say if you go corporate tax down to what, 15%, like Trump is proposing, it goes back to what I told you earlier, whereby during the Trump presidency, the deficit, I think by that time is when it hits around 25 trillion or 30 trillion, the government debt. So even during his term, even though he reduced the taxes and all, the economy still borrowed a lot.
Well,
that is my that's my defense on
that 400K.
Yeah.
Ni mchezo wa town.
That's why I just had my seats.
That's where the majority of the people are. And
well, if you say so,
Yeah.
then the 200% tariff
Yeah.
on John Deere by going to Mexico or European manufacturing, the Mercedes-Benz, the Alfa Romeos, the BMW, they will not sell to the US. It is the same effect. Or you say TSMC will have to set up plant in America. If they don't, I will impose to you 200% tariffs. If 400,000 to me or to you is a mchezo wa town, same applies to the tariff. It is unsustainable in this environment where you said most central banks have already acquired gold reserves to sustain the economy and also to match their reserves. Therefore, they are not really, and you have seen BRICS also try to diversify their reserves portfolio.
You see,
It means that whatever sanctions they put will have a shock effect on the market, but no real expected outcome from it.
you see, when you say 400,000, it's cast in stone as a number. But these guys are not going to stop printing. So at some point, incomes will rise way above that. So the net will only widen as more people get into that bracket of high income and they pay higher taxes. So I think it's a strategy that's used politically, so that they are like, this is for the rich, it doesn't affect you. But you also want to get rich. As soon as you get there.
It's more of like a carrot and stick. Because the people who are being affected, you're calculating politically, this is a small number. But if I can use these carrots to get the people to vote for me, once I'm in, all of you, apart from, let's say, the people who finance them, all of you, you're getting your share. Fair share of meetings. It's more of like think of Kamala as our president. No, I mean, yes.
Like someone decides to tax the rich.
Their word doesn't hold. You will have to see it, then you act. That's the issue.
Think about it this way.
You guys are now pushing. You're not forcing.
No issue.
Think about it this way.
Do you feel? Let me.
Would you pass a law that increases tax on your landlord?
No.
Exactly. That's what they are doing. You tax the rich, and the rich, they transfer that burden to the poor.
But
it's the same
the
thing.
taxes they're implementing, that you are saying they are going to increase the capital gains tax on unrealized gains, right?
Yeah.
How many people? It's what the cap is. Those who are earning $1 million annually. It doesn't affect anyone. It affects the millionaires, and it is just by 8% up. If you compare to what Biden was proposing, up to like what was it, 42 or something %. It's actually more conservative. So if you compare the two, whatever Biden was proposing before he dropped out, it is lower than what is there. So that's my argument on when you say you will be taxing the rich, while indeed she's from California. All California is literally the Silicon Valley of the US, whereby you see a lot of capital in there or around there. So of course, any policy she makes, she must understand that whatever tax hike, especially on the AI regulation, will do, it will always affect her home base.
But if you,
as a politician, interest is always of importance compared to the rest.
If you ever watched I believe the Senate proceedings on AI, well, Sam was proposing we should actually regulate the AI. He mentioned that, keeping in mind that he will be guiding the regulation in such a way I'm insulated, but I hack the competition. That's how it works. So, and also when it comes to Trump's duration, given that US has a worldwide tax, so if you are born in the US, wherever you go, I'll get you. US and Japan. So with the lower corporate tax, it just makes more sense for US citizens who, either way, they pay that worldwide tax.
Yeah.
They can easily go back home. It wouldn't really affect them.
Yeah.
Because if they increase taxes back at home, even though, let's say, they come to Kenya and they do their business here, so the taxes that they pay here, it will be deductible, but still when you go back home, you're taxed by the US government.
Yeah.
So I think it will be, it makes more and more sense in bringing back all that investments that out there back into the US, and then giving them, job creation.
Okay.
So that's how it played.
I think that's a fair point in terms of their policy and how they are different. My final question as we wrap this would be, from your side, what do you expect maybe from whatever outcomes that be, and how the market will react from the indices or even commodities? How do you generally expect it to be, at least immediately and maybe 3 months?
Globally or locally?
US. After whoever wins, do you expect gold to keep on rising how it has been going, or do you expect now people to pull back from that risk off basically and go back to risk on in the equities market?
No, I don't want to answer this. Okay. I really wish I couldn't answer this honestly, because we have a Bitcoiner here. But I see once things improve, then gold will have to go back down, considering that the central banks are those who are basically pushing the rally.
Yeah.
So it's not retail investors per se, but it's the central bankers. So given the history of central bankers manipulating gold price, so I see central bankers playing that role and gold going down. Given government mismanagement will continue, this guy will keep on bragging on X. On X. I told you should have gotten some Bitcoins, but if I was to remove the emotion out of my investments, then I see gold going back down once everything has stabilized and central bankers actually selling their gold reserves. That's what I say.
And just to stay with you before I go to Rufus, Nasdaq has been up, S&P has been up. Right now we are talking about S&P 6,000. Dow Jones basically wobbling about. What do you make of them, given they have been on 3-year bullish run? And it's good for the economy. Remember, it's good for the economy.
No, the issue with the US market, it runs on an optimism bias. That's how Wall Street works. And it mostly relies on the future anticipation of that particular market. So given that, I think Rufus had mentioned before, what land is to Kenyans that's what the US market is to the US citizens. So everyone is anticipating a bull run. And you find also the Wall Street and the media fills up this optimism bias. So you find within the mixture, there's some value investment and the value stocks. There's some growth, what do you call it?
Growth stocks.
There's some growth stocks, and then there's some yes.
And meme stocks.
Yes, and there's some meme stocks mixed in. So some, yes, they will fall, but mostly we'll still see the same kind of rally. An interesting point that I forgot to mention, for a local, if our central banks twist our banks to set generally a single digit interest rates, and also with the notification to the market that we won't be taking up short-term bonds, we may see a kind of a spike that we saw in 2017. But at that in 2017, there's the interest rate caps, but with now the fixed income not performing as well, people may now move to dividend yielding stocks, banks, probably some utility stocks. We may see a small uptick. Hopefully that works. If let's say our interest rates will be single digits. I don't know how the central bank will do it, but given worldwide central banks have the power to increase banks' submission, then probably that's a possibility that we may see locally.
Rufus?
Well, for me, I think when you visualize what we call the dollar milkshake theory, you visualize a glass containing a milkshake, and of course the straw. So the Fed has the control of the straw. So if they decide to inject liquidity, then everything, including the froth, goes up. So the fact that they are cutting interest rates, the US economy has really slowed down. So main reason they started with a 50 basis point cut was because they realized the danger that was ahead as unemployment had started to rise. So far it had gotten 4.3%. So now that they are cutting rates that fast and they are preparing the way for pumping more money into the economy, of course, with Donald Trump is just promising stuff, but you need to print money to implement if he wins. Kamala, it has been the cycle. Just print more. They just
beaten. Let's be real.
They were together.
Why are you forcing this?
So why are you separating?
She was the last vote in Senate, the decider. They had 50-50, and she had the last vote to make decisions. So I remember that well. So whoever wins, I haven't seen both sides of the parties arguing about government spending. For them, they are open with spending more. So as soon as this political thing is done, perhaps an inauguration in January, we will see more money coming into the system. And some of the fraud that keeps going up, I think it might be a very strong bull market for Bitcoin.
That's a good.
He had to go there. So I have to admit it right now. So when you go to X, at least I gave me some visuals out.
Thank you very much, Dominic. I think this was quite enlightening.
Yeah.
And for our listeners, as usual, I know you are seeing a lot of US election, and I think US election historically, at least for the last 20 years, has been consequential to a lot of government policies internally and obviously in the market and investment landscape. So feel free to interact with us. You can find Dominic on X under, what is your username?
Dominic Austrian.
Yes, Dominic Austrian, Rufus KE, Ogola J4, and of course at FX Peso Official. You are welcome as much as possible to ask any questions directed to us directly, or or through the comment section. We'll be glad to cover it in the upcoming sessions. Stay tuned for space and of course a couple of webinars coming about with the now charts to show historical price movements. I've been your host. Enjoy your day. Happy trading. Adios.